The interesting thing now is that, whilst blockchain is still seen as that new toy that everyone's trying to harness and trying to get benefit from, the reality is that we're seeing traditional finance, we're seeing central banks, we're seeing governments actually acknowledge the fact that the public, core traditional crypto is here to stay. It's an asset class that isn't going away. It's an asset class that a lot of the traditional financial institutions are actually adopting, or at least
wanting some exposure.
At least strategizing. Okay, what if? Okay, and there's been an enormous amount of change in those 6 years, and I guess if out of all the changes that have happened in the last 6 years, through all the bubbles and whatever else, the reality is right now we are getting increased clarity on regulations. We are seeing very good quality custodians emerge to hold digital assets. One of the most pressing issues with respect to crypto is these venues that lose consumers Bitcoin and other crypto with enormous losses. And I think that's one of the two main reasons why there hasn't been an enormous amount of institutional push right now from traditional finance, is mainly because of those two factors. The lack of regulatory clarity that we're seeing now, and good quality custodians. And if we look at what happened in Hong Kong last week, the Securities and Futures Commission actually announced their framework around virtual assets that includes security tokens. And so that's an interesting thing that's actually played out over the course of the last few months. Is security tokens have been, it's a narrative and it's a symbology that has been pushed and pushed. Security tokens is the next push. It's going to be the next wave of adoption, and I would tend to agree with it.